David, IBM is reporting EPS here of $3.17 versus the expectations of $3.07, so a beat on the bottom. Revenue comes in line at $19.16 billion. Gross margins better than expected at 47.4%. For the full year, they are reiterating these targets, EPS of $13.90 and calling for free cash flow of about $12 billion. Segments, revenue mostly in line. Cloud and cognitive software, $5.6 billion. Global business services, $4.2 billion. Global technology services, $6.8 billion. The street was at $7 billion there. Remember, on August 2nd, IBM is going to provide that updated guidance on reflecting contribution from Red Hat. This conference call starts at 5 p.m. Eastern, and we'll be on it. Guys, back to you.
Josh, thank you. Also, Josh Brown, Paul Hick here. Can we get a quick comment? Any thoughts at all, Josh Brown, on these numbers?
On IBM?
Yeah.
Kind of the opposite of Netflix.
Tough to get excited.
10% free cash flow yield. It's cheap, no expectations.
I mean, about Netflix.
It's Bizarro day.
Well, fake it.
No, I mean, IBM typically is weak, so this is a big change for the stock, whereas Netflix, has been a disappointment. You don't normally see those two. It's usually the other way around.
Their respective market caps are going to approach each other pretty soon, with IBM up a bit and Netflix coming down a lot. At IBM at about 127 billion or so.
So what's Netflix is even, where is
160 before this drop.
Before we started today.
Yeah.
So down.
They're approaching that direction.
Yeah.
Down about 15, 16 billion in market cap, at least at that 10% hold.
Right.
We'll see.
Santoli, any other thoughts on IBM?
I mean, just that it's, I think as expected is fine. The stock has been a little bit in a confused state. You closed the Red Hat deal, a little controversy as to whether they overpaid for it. But I do think that if you can reiterate guidance and say free cash flow is coming in according to plan, $12 billion is a lot of it. And I think it's just basically that's just a cushion. But I don't think there's anything that changes your opinion of IBM.
Shareholders would rather see them overpay for Red Hat
than
keep doing buybacks and have no answers about the future.
Without a doubt.
And I think that's reflected in the share price. And it's not unlike other old tech companies that learned a new dance. I think people have a newfound respect for the management team that's willing to do that. It sounds crazy.
Turn cash into a business that the market was interested in before.
Yeah, act like you're going to be around in 10 years. Do something.
Well, and when I see stats like IBM services backlog at now $111 billion, more than 30% in cloud engagements, and this is really before you get all the Red Hat numbers factored in. I mean, that certainly sounds.
And their operating gross profit, I think, margin was 47.4%, which was ahead of consensus. Guys, thank you. Josh Brown, Paul Hickey joining us.